G'day. Welcome back, everyone, to another episode of the Australian Property Investment Podcast. If I'm looking a little bit tanned, it's because I've spent a couple of weeks up at the sunny coast and absolutely love it. For those that know my family as well, my brother's up at Brisbane. So I've got a real affinity to what's going up north. And that's why I've asked Lauren Jones to come back on. G'day, Lauren. How you doing?
G'day. How you going?
I'm great.
The plan looks great.
Thank you, mate. Thank you. Look, we love it. Anyone from the southern states, during when it gets a bit colder, is chasing some sun. So, Gold Coast, Brisbane, Sunshine Coast, just has our name written all over it. And look, being up there and driving through, spending some time up in Brisbane, you can't ignore the fact that there is a lot going on the ground in Brisbane. I mean, you talk about the infrastructure that's going in. You see the buildings that are coming through. You see the energy. I think you compare that to, say, Melbourne, and you can kind of see the vibrancy in those cities reflected in the purchase in the property market. It just says there's a lot happening in Brisbane. I know that you're really close to what's going on in the Brisbane market, Lauren. So that's why I really want to kind of pick your brains out, because a lot of clients are going, "Hey, is Brisbane kind of run its course? Is there much juice left in the tank up there as well?" So why don't we start with that? Because that's probably the most pertinent question for a lot of investors going, how is the Brisbane market doing? And do you still think there's a little bit of juice left to squeeze in that tank?
Yeah. So the Brisbane market has obviously been really hot this year, and it's still going. We're still doing about 1% every single month, or, about $10,000 for both houses and units. Units have been tracking much faster than houses,
Wow.
which is abnormal. I do still think there's a bit of juice in the tank, because from what I can see on the ground here is there's still massive demand, and it's just not being met with enough supply. The kinds of properties that are starting to slow down are your compromised assets. So properties, whether it be main roads or flood affected, things like that, you'll go to those and there might be a couple of people at the open home and they're taking a few weeks to sell now. They tend to still be getting the same prices, but it's just taking a few more weeks to sell. Whereas you go to, the great properties with all the aspects that people love, and you're still getting 50 groups through open homes. So,
Wow.
I mean, I guess it's a normal market in that sense, with different markets within markets moving at different times. I still think there's going to be at least another good 6 to 12 months in it. We're also coming up to Christmas as well. So we're probably going to start to see even less stock coming to the market in the next couple of months. And we've already got a stock shortage. That's probably one of the biggest reasons why the Brisbane property market keeps going up when these other markets are going down, is that we've just got no stock. I know Melbourne and Sydney, they're starting to kind of have their spring selling seasons. Mm-hmm. We're not.
Yeah. When you're talking, and you talk a lot to real estate agents, for example, are they talking, maybe is there a potential, pipeline that's coming through at the moment, or is it just going to look, people are just holding off and there's just seriously just a lack of enough supply at the moment?
Yeah, no agents I'm talking to are talking about, massive volumes that they're coming up with, and agents love to talk about it if they are. So I don't think it's coming. As far as new stock to the market, a lot of people, it's still difficult to buy. So a lot of people are choosing not to sell because they've got to buy with a subject to sale clause, and it's still a little bit difficult too. It's really difficult to sell because and if you need to rent, because the rental market, we've still got, 1% vacancy rates. And people are very put off building as well. Construction costs are high. There are big delays. So people are just choosing to stay put.
Yeah. So if you're listening and wondering why I've just mentioned there about, say, the real estate agents, they're at the top of what I'd call the food chain in that sense, because they're the ones that are going out to do the listings. Then if they win that, then they've got to do the copy, the photos, get that property ready to go onto Real Estate or Domain, for example, and then maybe go out to their network of buyers agents. So when we're talking about what are the real estate agents seeing that in terms of when they're talking to buyers agents, it's because we know it's going to come in the next, say, 1 to 2, maybe 3 months, even by the time they get that property ready. Maybe they do a lick of paint here and there, for example, the photos, getting that all approved and the marketing to go out. So there's often this little lag between when they sign the contract for the property to be listed and when it actually goes online or goes onto the market, which is where when you're using a buyer's agent, that you can usually jump in before that property does go onto the market. Or if that property needs a little bit of work, then it's like a buyer's agent can jump in there and say negotiate on that, because it saves the vendor doing some work on the property. So Lauren, take me through some of the conversations you're having with agents, if you want to elaborate that a little bit more for those that are fairly newer to either the buyer's agent proposition or newer to the investing side, how you kind of come in and what conversations you're having on a day-to-day basis as well.
Yeah, absolutely. And I get asked this a lot by people. So when we talk about off-market properties, 9 times out of 10, there's a sales agent involved on the other end of it. We're not going direct to the sellers most of the time. So what will happen is there are a few reasons why a seller may choose to sell off market. The one that we like purchasing probably the most is when there's a tenant in place. Now, a lot of the times tenants don't present a property ready for sale. So a lot of the time the seller wants to sell, the agent might say, look, it might take, the tenant's only in here for a few more months. Let's wait until they leave and then we can, pick them out, put a fresh lick of paint on it, style the home, get it ready for sale. But in the meantime, let's run a few some off-market buyers through and we'll see if anyone's interested. And if they do that, they can often save all of those marketing fees. They'll save, it might cost, I don't know, $5,000 to put it on realestate.com, another $500 to put it on Domain, marketing photographs, vacancy with no tenants, staging maybe another $5,000. So a lot of the time we can come together quite nicely with a win-win on those ones. A lot of the time people having a bit of maybe a messy divorce, they might choose for an off-market sale because it's already really stressful. They don't want to be gathering the kids and the dogs and everything a few times a week to open up the property for sale when they've got all this going on the side. And then the ones that we don't like buying tends to be unmotivated sellers testing the market. There's a lot of those. Now, there's this concept that off markets, you've often got winners and you've got losers. I find with the tenant situation, a lot of the time, that's probably a bit of a win-win most of the time. But when we've got these unmotivated sellers, they tend to be the winners if a transaction actually does go through, and the buyer on the other end tends to have probably overpaid for the property. So yeah, that's kind of how it works, how it goes down. My team, they call agents on a daily basis. They send text message, emails out to our database of agents trying to see what's coming up and when. And that's how we get access to these off-market properties.
Yeah, great. In terms of, I guess, the negotiation, we've had plenty of buyers agents come on to and talk about their process. But in terms of, I guess, your secret sauce and how you go about the negotiation side and the price part, take us through what's a little bit of your secret sauce and your methodology as well.
I think probably why I've got such a good strike rate is my communication with the agents. So a lot of ordinary buyers, they'll simply just submit an offer and that's it. They'll wait and hear back. I'm probably calling an agent 5 to 10 times between, inspecting the property and actually going under contract. They know I'm there. I'm a pest. And it's all about the questions you ask as well. Some agents will tell you a lot more information about where the other offers are. That's great. And that really gives us an advantage because we just need to pay either, $1,000 more, or we just need slightly better conditions and the property's ours. But for agents that won't give away much, you've kind of got to find out a little bit more information on every single call, and you kind of edge to a point where I pretty much know where these other offers are and I pretty much know what I'm going to have to offer in order to secure the property.
Yeah. You mentioned about conditions. That's one thing that I love talking on. I talk terms when you're making an offer. Don't talk dollars, talk terms. Mm-hmm. Some of the terms that you'd be employing, are we going unconditional on this? Are we shortening settlement periods? Take us through some of the offers that you've done recently. When someone's thinking about how to buy successfully, what are some of the terms that you're putting out there?
Yeah, so as far as finance goes, I very rarely purchase property with anything more than a 7-day finance clause. If the broker's happy with it, we're happy to satisfy the finance clause from the start. As far as building and pest goes, if the agent has provided a building and pest report and I'm confident with the company that's done it, like I've used them in the past or I've seen their reports and I know that they're quite thorough, we're happy to use that and satisfy the building and pest if everything checks out there. Otherwise, my building and pest inspector can normally get in within about 2 days. So we can have a really short building and pest clause. And on the finance clause side of things, so I generally would do 7-day finance clause. The average is probably about 14. So we're normally a front runner there as well. Now, one clause I do like to include when we're purchasing a property that's going to be vacant, but it's going to be a rental property, is we like to include 3 clauses into the contract. So the first clause allows us to have access to the sales agent's marketing photographs and floor plans. The second clause allows us to advertise the property for rent prior to settlement. So generally 7 to 14 days prior to settlement on realestate.com. And the third, this one, sometimes it's a bit hit and miss whether or not we get this one approved, but we actually put a clause in to see if we can do an open home for prospective tenants. So a lot of the time when we do this, we're actually able to get enough applications in that we can have a tenant move into the property straight after settlement.
Awesome. If you're listening, that's as an investor, that's critical. Like the downtime. So if you settle and then you need to appoint a property manager, then you need to get the agreement done, then you need to do the open homes, for example, you're missing out maybe 2-3 weeks worth of rent. Versus if you've got this aligned and your stars aligned and you can get a tenant to move in straight after settlement, we're talking about that's if your average rent's $500 something bucks, you're talking about saving yourself $1,500, $2,000 sometimes in terms of shortening that period and being able to rent that period that property out from day one. The other part for our maybe our New South Wales listeners is when you talk about a 7-day finance period, we're lucky if we get a finance period here in Sydney, but Queensland's different. 2 weeks for finance, and you're saying, look, we'll negotiate down to 7 days. Very rarely will you go on conditional, whereas, bargaining chips in Sydney is we'll go on conditional on this, for example, and waive your right to a finance period. So you can start to see there are some benefits when you start to become a borderless investor and you're buying in different markets. There are very different terms that you can kind of pull the levers on when it comes to making an offer as well. And I think sometimes Sydney buyers, when they're buying in Brisbane and Queensland, for example, are really quick to go unconditional, but it's going, hang on, you actually may have a finance clause that you can exercise here as well.
Yeah, it's great here. We can do most of the due diligence after we've agreed on a price. And a lot of the time when we're working with interstate investors, what I tend to say is, or interstate relocators, is you don't have to fly up for the inspections if you really want to see the property. We'll go under contract. That way we've agreed on a price and we'll fly you up for the building and pest. That way, the property, it's all agreed upon. You're not wasting your time coming up here, but it's also not yet unconditional. So if there's any issues, you're still able to terminate. Another clause I was just thinking that we often put in, or we pretty much always put in when we're purchasing in a body corporate, is a search of the body corporate records. Now, it costs about $350, and these are hefty documents. Like, I've seen some of these documents that are 700 pages, often older complexes when the records go way back. But the company that we outsource this to, they look at all 700 pages and they provide us a nice, often about 20-page summary. We recently did one of these and we were able to pick up on a $37,000 special levy that was due. And what happens is, because that special levy is attached to the property, not the owner, the person buying that, if they haven't done their due diligence and uncovered this special levy, they essentially inherit it. So after settlement, they could be hit with this $37,000 at any point. Wow. So to spend $350 on a property search like that, absolutely worthwhile.
I'm glad you've said that. We've had strata managers, and this is all part of building your team as an investor. Going, if you're buying a strata property interstate, for example, one, you should be buying it through a buyer's agent. Second, you should be spending the extra few dollars, whether it's building in PES or the strata report, to actually uncover any potential something that's going to blindside you as well. So thanks very much for sharing that, Lauren. I think part of that comes out, through the contract period, getting the right team on board as well. So when someone's going through the part of, say, buying a fixer-upper as well, building costs, I mean, we see that blow out here in Sydney and particularly in Melbourne as well. What else are you seeing on the ground there in Brizzy?
It's funny. There is not a lot of money in property renovations and flips and development at all. I was actually just speaking to a developer this morning who he's pretty much not bought a site for at least 12 months because nothing stacks up. I don't know who's out there actually paying for these sites, whether it's people just simply land banking, but it's very difficult. Like, you're running such tight margins, and perhaps if you're paying cash, you don't have the high interest rate costs. But because we've got construction costs that are so high and interest rates that are so high, it pretty much blows out any project. And it's probably a big part of why we're not seeing a lot of new supply coming to the market here in Brisbane as well. But as far as renovations goes, probably the most common things I see people wanting to do are paint, carpet, kitchens, bathrooms. Now, for a standard, probably, maybe a 4-bed, 2-bath, 2-car home, you're probably looking at about $8,000 for a full internal paint in today's market. For full flooring throughout the home, you're probably looking at about another $8,000. That's just like a hybrid flooring and carpet in bedrooms. Kitchens, you're probably looking at $30,000 to $40,000 now if you want, the nice fixtures. And bathrooms, I actually just renovated my own bathrooms recently, and they come in at about $30,000 as well. So it's really hard to kind of renovate. A lot of the time when you're renovating at the moment, you're putting $1 in and you're getting $1 out. There's no money in it, especially once you paid for stamp duties and interest rates and everything like that throughout the process.
Yeah, okay. I mean, with that, I mean, there's opportunities are you seeing for some of those ugly ducklings that are coming up at the moment, or people just going, look, we're not going to touch that and there's too much work at the moment from an investor side?
Yeah, a lot of people still don't really want to touch those kinds of properties unless they're neat and tidy and still livable.
Yeah, cool. And I guess in the infrastructure, I mean, I touched on that very early on at the moment where you see a lot of the stuff that's happening on the ground in Brizzy. So someone that hasn't been up there, what are you seeing that infrastructure-wise that's kind of catching your fancy at the moment?
Oh, it's all happening up in Brisbane. Queen's Wharf, that's just been done. So that's recently opened. It's very eye-catching if you've seen it online. They've got new motorways coming up, upgrades to railway stations. I grew up in Melbourne, and when I moved to Brisbane, I found it quite slow, like a very slow pace of life. But in probably the last 12, 24 months in Brisbane, it's seriously changing. And even when I go back to Melbourne now, I actually think Brisbane's got the better buzz.
100%. I've said this numerous times on this podcast. I've had people from Melbourne. I've been down there recently quite a few times. The vibe in Melbourne feels dead compared to Brisbane. Brisbane feels alive. There's a vibrancy in that city. You can start to see it come alive. You maybe call it the Olympic halo effect that's coming through, but you look at the traffic that's going from the Sunshine Coast down to Brisbane, down to the Gold Coast. I mean, granted, they're doing some roadworks through there as well. But I'm like, this is like Sydney traffic. This is insane. And people and locals are even thrown by it as well. And it wasn't like this quite a few years ago, but people are moving there. You can feel like there's something in the air going on, and it's got livability. From a price point perspective, it's still very, very competitive. You're going to move there to live. And from an investor perspective, it's still got a pretty good price point with decent yields as well. So if someone's looking for a yield play, what are you suggesting that's going to help from a yield perspective up in Brisbane, do you think?
Yeah, yields are definitely not as strong as they used to be, but still, compared to other capital cities, they're good. The two probably better yielding investments are either new homes a little bit further out on smaller blocks. And that's because a tenant isn't going to pay much more rent for yard space. So, but an owner will. So you're able to purchase property for a lower price point and still get that same rent. And then the other thing is units. So units in good inner city locations, maybe within about 10 Ks to the city, they're getting good rents. Like you're probably getting $650, $700 for a 2-bed unit within that kind of range. And you're probably spending about $700, $750 purchase price.
Yeah, right. So what are you seeing with the units there? Like why you said that they're highly performing at the moment. What are you seeing there in the unit market that's really driving that level of the growth?
We just don't have that many units in Brisbane, especially these, small 6-pack, 10-pack kind of complexes, and they're really popular. A lot of people, whether they're first home buyers, investors, downsizers, a lot of the time we often see if it's a divorce or a breakup, you find a single party going into these units as well. Yeah. There's just not many of them. And if you don't, I often say you've either got to compromise on the dwelling or the location, when you're looking below about 750K. And most people simply aren't prepared to compromise on the location. So in that instance, they've got to compromise on the dwelling, and that's when they move down from a house to a townhouse to a unit.
Yeah, fair enough. Yeah, perfect. If people want to get in touch with you, Lauren, how do they do that? What's the way that people can reach out to you and find out more about what you do?
Instagram, we're quite active there, keeping up with Lauren Jones, or just my website, www.ljba.com.au.
Beautiful, mate. I want to say thank you very much. I know we've got a couple of mutual clients that we've worked together in the past, and I've seen what you're doing. So I want to say keep kicking goals, mate. I love seeing the growth in your business personally, professionally as well. And like I said, Lauren is on the ground in Brisbane. So if you're looking to buy in Brisbane, you want to get a feel for what's going on, reach out to Lauren and her team, and they'll get a feel for what the vibe is and what you're looking to buy there as well.
Awesome. Thanks for having me on.
Thanks very much, Lauren. Appreciate it. That's a wrap for another episode of the Australian Property Investment Podcast. We'll talk to you soon.